I conduct any class or webinars, there must be a reason. So why did I conducted it in May? It's so that we can make use of the correction because of the so-called the debt ceiling. So I actually got some, in fact, all my REITs because of this correction and because of the debt ceiling. All right, so for me, my personal game plan is I'll have 3 tranches. So I already entered all my first tranche. Not all, some of my first tranche because I haven't entered into DBS, UOB, OCBC, or the blue chips yet. That will be a later part because I believe the 3 local banks will probably have a bigger drop. Probably when the Federal Reserve start cutting interest rate. All right, so my first tranche, not all, but are there especially for the REITs already in already. All right, because like what I shared in May, our RI is below 40. So historically, once our RI, which is the risk, relative risk index, is below 40, historically it shows that the risk level is relatively low. Is it the lowest? I don't know because I mean I posted the latest RI yesterday. The May RI level was 38.13. It's still below 40. Can it go below 30 and go into a green zone? I certainly hope so. That probably will be when I will enter my second and third tranche. Don't worry, later on during the portion for SPP, I will talk more. But just to let you guys know, every time I do a session, there must be a reason why I conducted the SPP class in February is so that you guys can get to know what is my thinking about the market going forward. What are the asset classes? For example, REITs. Some of you guys may not have known REITs, so probably you need time to get used to read what is REITs, all these things, find out more and find out all the risk target that you are looking at. Then I conducted the follow-up class in May so that we can make use of the correction because of debt ceiling to get it, at least to get into the risk at, some of the risks are, like for example, Parkway Life REITs. Later, I mean, we can go through, I think, at least I got in at a relatively good price. All right. I'm also in Fraser, Centrepoint REITs. All right, all these things. So all these I'll cover later on. Also, that's the objective of May. So tonight we are doing the June, the so-called the market update, to let us have a projection of what may be coming up next. All right, so like what I mentioned the last time, I do see the next major turning point in the stock market will be in Q3. So still around August, September. That may be the period I may be entering my second tranche. And finally, my third tranche may be entered after Federal Reserve cut interest rate, which I think it will be probably next year, not this year. All right, so I'll cover more on this later on. All right, so please allow me to share my screen. So please prepare a pen and paper. I think tonight's session will be interesting. You'll look at Go as well. I think Go has been correcting. So for those who have not been participating in it, since the February course, the opportunity may be here. Also, please prepare your pen and paper, and we will go through tonight's session starting right now. Just to check, are you all looking at my
Yes, Derek.
screen? Yeah, okay.
Yes.
All right, so Okay, so as usual, whatever I share tonight is also only my personal view. It's my personal opinion based on my last 24 years in the financial market. All right, so I do not have a financial license, so I cannot give advice or recommendation. So if I mention any asset classes like REITs, gold, any stocks, ETF, all these things, all right, it's just probably what I'm looking at is something for you all to look further, do more analysis on your side, and then make a calculated trading or investment decision. All right, so me and my colleagues, we are not going to be responsible for any of the action that you take. All right, if you need any professional advice, please look for professional financial advisor. All right, so that they can give you independent professional advice before you make any financial decision regarding the information presented in this webinar. All right, so we are all adults. Be responsible for our own action. Or I always say that. And no one care more about your financial wealth than yourself. All right. So I can only share with you guys my view, my opinion, which I'm always wrong. So so take it with a pinch of salt and do your own analysis based on the direction that probably I can provide. All right. So now, I think this is something I've always shared, but I just want to share again. When I mention short term is anything less than 1 month. Intermediate term, which is what our cycle chart is always showing, is from 1 month to less than 1 year. For example, for this session, I'll be showing you guys a cycle chart from June until end of this year, where the cycle chart is projecting the turning points of the different asset classes going to be. All right. So long term is from 1 year to less than 10 years. Ultra long term is 10 years or more. Just to emphasize again, SPP, which is the stagflationary protection portfolio, is what I designed for 2023 and 2024 because I believe we will be going through stagflation, and like what I mentioned, because of this REITs, gold, some of the blue chips with good dividend paying will be some of the good candidates that we can look at to have it in our portfolio. All right, so do take note of this time frame definition. So now let's do a recap. This guy is stretching his head. Yes, in case you don't know who is he is Jerome Powell, because he has increased the interest rate 10 times since March last year, but it's not achieving what you wanted to achieve. So, ladies and gentlemen, why did he increase interest rate? Why? Can y'all check in the chat box? Why did he increase interest rate? It's to fight inflation, correct? Let me show you. Yeah. Yes, I'm showing you all the federal fund rate. Are you all looking at this?
Yes, Derek.
Yeah, all right. So you guys can always go to this website or to look for all these data. All right, so This is since 1955 until right now, the Federal Reserve Fund rate. Let me zoom in. Can you see Federal Reserve have increased interest rate from almost 0%, 10 times already until May. Until now, the range is between 5 and 5.25. Ladies and gentlemen, look at it. I would say this is the angle. Look at the angle. This is the most aggressive rate increase by the Federal Reserve since the 70s and 80s. Can you see? Even the year 2008, before the global financial crisis, wasn't so steep. Can you see that? And yet, ladies and gentlemen, after increasing 500 basis points, let's look at the inflation number. Of course, the inflation number that Federal Reserve prefer is actually PCE, but it's called core PCE. PCE stands for personal consumption expenditure. Core means exclude food, exclude energy. So, you see? So let's take a look. Let's zoom in. Okay. Anyway, you all can see, right? So after increased interest rate for 10 times, 500 basis point, all right, the PCE, yes, it has reduced from probably about 6%. The latest is about 4.75. Okay, 4.7. 6 to 4.7. Then a lot of people in the market say, wow, the inflation is coming down. But ladies and gentlemen, do you know what is meant by 6%? 6% is the highest since 1980. All this while, we have about maybe 2, 3, 4. Can you see this interest rate? No, this inflation ran up so fast. That's why Federal Reserve is scared really. If they know if they don't do aggressive hiking, they are not able to contain this inflation. But after 10 rounds, they can only reduce from 6 to 4.7. Then a lot of people say, wow, 6 to 4.7, inflation coming down. So Federal Reserve have to cut interest rate. Please, ladies and gentlemen, 6 to 4.7, on the average, probably is around 2 to 3. 6 to me, it's something like 6 drop to 4.7 is like 180 kg, drop to 150 kg. Wow, then a lot of people say, wow, drop 30 kg already. But ladies and gentlemen, the person is still at 150 kg. The normal weight should be about 60, 70 kg, right? So why are people so happy? I cannot understand why. Because 150 kg is still very, very heavy. Do you guys agree? Also, after 10 rounds of hike increase, inflation is not, like what I keep on mentioning, inflation is not going to go back down to 2 to 3%, like what Federal Reserve wanted so soon. Once inflation gets started, you will sit through the economy into everyone's daily life. You understand what I say? So that's why all I can say is Federal Reserve was too late in this rate hiking cycle. Initially, they were even talking about the inflation is going to be transitory, right? They say that already, they got it wrong already. All right. In fact, before the Ukraine war, inflation already started already. It's just that Ukraine war make it more serious. Also, my take is this: don't be too happy. Because I think Powell is not happy about this. After increasing 500 basis point, he can only reduce it from 6 to 4.7. So this is the inflation rate, which I think is for the fastest rate increase since 1970 and 1980. I think this result is no good, simply because they were too late. They should have done it earlier. That means they should have done it before March last year, but they dragged. And too bad, wrong. So now whole world has to pay the price. Right, so inflation is not really coming down, and I don't think it's going to. I mean, it has come down, but not coming down drastically. And for it to go down to 2%, the Fed target, I don't think it's going to be so soon. All right, so this is for the inflation. Or it's not coming down as fast as what Federal Reserve Powell what he wanted. All right, then on the other hand, let's talk about stock market, US stock market. So this is where the stock, I mean, S&P, I'm showing you guys as S&P, it topped around early 2022. It starts to turn down. Found a bottom here around October last year, and it turns up. So after 10 rounds, from about 4,008, now it's 4,002. The stock market is back to its so-called August high after 500 basis points. Is this what he wanted? I don't think so. I believe he want more pain. I mean, I'm talking about Jerome Powell. He want more pain, but it's not really seeing it. All right. The job number last Friday, the job number, I mean, the job creation came in higher, even though the unemployment rate increased to 3.7%. So we are still having a very strong labor market. Also, that's why, ladies and gentlemen, this guy is scratching his head. After he and his team has done so much since March last year, now is already 1 year and 3 months already. Inflation still so high. Stock market is back to not probably halfway of where it dropped. The labor market is still so strong. That's why he's scratching his head. All right. So now I want to talk about this. A lot of people ask me, so are we going to have a recession? To me, we'll definitely have a recession. It's just that whether is it soft landing or hard landing. To me, anyway, I'm always wrong. So, and I can say this is the most anticipated recession, right? Everyone is talking about it. Talk so long, it still haven't come, right? Correct or not? Until some people say, no, we're not going to have recession. But to me, I still think that we're going to have a recession. All right. Like what I shared, one of the so-called better indicators for recession is actually the US 10-year minus 3 month, the US Treasury yield curve. All right. So let's take a look. So y'all can come back to this web page again. Y'all key 10 minus 3. So I'm showing you all the 10-year minus 3 month. Can you see? Treasury yield. Spread. All right. So the gray column are periods of recession. So normally 10-year, the yield is higher than 3 months normally. All right, but right now, when the 3 month is higher than 10-year, that's why it's when it become negative. Because you take something smaller minus something bigger, you become negative, right? Why the 3 month, which normally is so-called lower than 10-year, but because Federal Reserve have been increasing interest rate, that's why the 3 month has been going up, become bigger. So this one smaller. So smaller minus bigger, it become negative, which is like, this is what we call inversion. This is a zero line. You see inversion, inversion. So whenever there was an inversion, it was followed by a period of recession. This time around, we are here. Can you see we are relatively deeper than any of the last 3 recession? Can you see? I mean, at least much deeper than the last 4 inversion. Can you see? So if we zoom in, it's starting to turn up slightly. But when will recession come? Recession will come, you realize it's always after the 10-year minus 3 months steepen. That means go above 0, become positive again. You see? This is a phenomenon, unless history doesn't repeat itself. So ladies and gentlemen, so we are here. Last Friday is negative 1.81. Still quite far from quite far from 0. All right, unless you tell me this 10-year minus 3 month is forever going to stay below -0. That means it's always going to be inverted. Then we will not have a recession. But we have to ask ourselves, what is the chances of that happening? That means what? That means Federal Reserve is going to maintain high interest rate forever. I mean, like maintain at 5% forever. Is it? If like that, I tell a lot of people will die already. Oh, that's why one of the cracks that I see is coming next could be this. You all go to Tani and You website. Do you know we have a public blog, not private blog, public blog. How to see the public blog? You come to tinyandYou.com. You click here. You see read our blog. Then you click this. Can you see public blog? This one is public, can view one. I posted something, I think Friday, I think. So I think the next shoe to drop will be the US commercial real estate. Or the high interest rate already start to impact some of the commercial. I'm talking about commercial, I'm not talking about residential. Commercial. You can go and read why commercial? Because now as more companies let their so-called employees work from home. There's actually less needs for companies to rent or buy a place to house their employees, right? Because of COVID-19 pandemic. All right, so then the interest rate has increased. Also, that's why we are starting to see cracks. I think you all can go read all these things. And even the Singapore REITs they invest in the US office real estate. You look at the price. That's why don't go and touch all those REITs that invest in the US office or commercial real estate. You see for yourself, Manulife, US REITs, Prime, US REITs. Why did the price come down? Because there are more, the vacancy in the offices that they own is getting lower and lower. Why? Because like what I mentioned, no company don't need to rent a place to house their employees. So when the occupancy rate comes down, the so-called the income, the NPI that the REITs get will be less. When the NPI get less, then the dividend they distribute out will be less. When the investors see this, yeah, my DPU, distribution per unit, getting less and less. So those people don't want to hold this kind of REITs. That's why they sell. That's why the price keep on dropping. Then some people will say, wow, the price drop already. Wow, value is here already. Ladies and gentlemen, I think this whole US commercial real estate crisis, I don't think it's over yet, man. Or you can go and read. I already write all this. You can go and read, okay? So let's come back. So unless you tell me Federal Reserve is not going to so-called reduce interest rate, is going to maintain high interest rate, which I don't think they will do it. Especially when there's, let's say, a US commercial real estate crisis. And based on that, ladies and gentlemen, I think the regional banking, because US regional bank, they give out loan to all these commercial officer is double of that of those big banks. So that's why I see we are going to the regional banking crisis in the US is not over yet. Also, Federal Reserve, yes, after increasing 500 basis points, they created the collapse of the Silicon Valley Bank, Signature Bank, all this, right? In a way, Credit Suisse, all right. But apart from this little pain, there's nothing much for Powell to show for the 500 basis point increase. Also, unless you tell me Federal Reserve is not going to reduce interest rate, they're going to maintain at 5% or even increase to higher and keep it there forever, then I think the whole world will collapse already. So if you think that Federal Reserve ultimately have to reduce interest rate, and in that way, it will start to cause the 10-year minus 3 month to start to steepen and become positive and go above zero, then at least historically, that's where recession will come. All right. That's why to me, a recession is definitely coming. It's just that when and whether it's going to be soft or hard landing. All right. Just to check, I'm showing you all my slides. You all looking at my slides, right?
Yes, Derek.
Yeah. Anyway, there's actually this Wells Fargo recession indicators. So this is actually the so-called the US 10-year Treasury yield, not price, is yield. This is the Federal Reserve Fund rate. This Wells Fargo recession indicator says whenever the Fed fund rate, which is this green line, exit the previous low of the US 10-year Treasury yield, like here, when it exit the previous low, recession is to be expected. In the past, recession followed this Wells Fargo recession indicator by 36 to 34 months, with an average lead time about 17 months. So, ladies and gentlemen, right now, the Federal Reserve Fund rate is 5 to 5.25, right? Can you tell me what is the so-called US 10-year Treasury yield right now? Anyone, can you key in the chat box? What is the current US 10-year Treasury yield? Anyone? Go to CNB, not CNB, CNBC. Go under bond, CNBC. Are you all looking at CNBC?
Yes.
Yes, sir.
Mm.
Go under bond. US 10-year, 3.698. So now Federal Reserve Fund rate 5.25, 5 to 5.25. So that means that the Federal Reserve Fund rate should have already go above the so-called the previous low of the US 10-year Treasury Act. Let me show you. This is the US 10-year Treasury. Then let me put in the Federal Reserve Fund rate. So the red line is actually the Federal Reserve Fund rate. And the blue line is actually the 10-year US Treasury yield. So probably let's zoom in. So can you see the low was here? The 10-year Treasury yield, the previous low was here, which is about 2.6. Then when Federal Reserve Fund rate starts to go above 2.6, probably it's around, can you see it's around September 2022? So according to Wells Fargo's recession indicators, when the US Federal Reserve Fund rate go above the previous low of the US 10-year Treasury yield, we can expect a recession, right? So when that happened, it was in September. You see, it was around September 2022. So now Can you see the red line is above the 10-year, the Fed fund rate? The Fed fund rate, can you see, is above the 10-year. But when the Fed fund rate starts to go above the US 10-year Treasury, is around September 2022. So let's go back to this. So can you see, whenever Fed fund rate exceeds the previous low, recession is to be expected, which this time around happened September 2022, right? So based on this, recession followed this indicator by 6 to 34 months. So let's count. So 6 months from September 2022. When is that? Can y'all tell me? 6 months from September 2022. In the chat box, let's take a look. March 2023. But until now, no recession yet, right? So 34 months is wow, it's like 3 years later from September 2022, too far away. Let's take an average of 17 months. So from September 2022, 17 months. Assuming this time round, the lead time is about 17 months. So when would that be? September 2022 month, 1 year will be 12 months, right? Will be September 2023, right? This year, another 5 more months. When would that be? It's based on 17 months. Anyone? February, right? 2024, right? So if this time around the recession is to follow this lead time of 17 months, we probably will see a recession by February 2024. The earlier, I think, the better it is, because then Federal Reserve can do something about it by cutting interest rate. Because remember, next year, something big is going to happen next year. You all know what is it going to happen in US? Yes, the US presidential election. That's why I say the earlier recession comes, the better it is, because Federal Reserve then can cut interest rate. All right. Now they increase to 5.25% already. Enough room for it to drop already. It's just that the inflation is still very stubborn. So can you see? So inflation is definitely coming. Based on these Wells Fargo indicators, probably we are looking at this kind of timeline. I don't think it will be 34 months this time around. I think that is too far away. All right, probably take a 17 month will be more appropriate. And do you all know, just in case you all don't know, go to our website. Our Timing AU website. You all know we have a private blog, right? You log in here. So as TMY member, we can log in to look at the private blog. Remember, this is private blog. Just now it's public blog. Public blog is for the public one. They cannot log in here unless they are a Timing AU member. So can you see yesterday I posted the RI, the May RI, based on the closing price of May. So which is about 38.13. And ladies and gentlemen, look, the RI is made up of 40% of CA component. 30% of TA component and 30% of FA component. And look here. Wells Fargo recession indicator is one of the indicators that use to construct our RRI. All right, so going forward, every month I'll update this RI so that we can have a gauge the risk level of the US stock market. But can you see, I included this to see how this Wells Fargo recession indicators will so-called work together with our other component and altogether 14 major indicators and 47 sub-indicators. You all can go and read. Also, this RI is mentored by me, so and I will share update every month and publish in our private blog. All right. So if you ask me, I think we will definitely have a recession. It's just that wait, I want to go back to my slides. It's just that when is it going to come? All right. Okay, I've shared with you this. So how long will the recession be? Are you all looking at my slides? Just to make sure.
Yes, Derek.
Yes, So how long will the recession going to be? Like what I shared. All right. We look at the 10-year minus 3 months versus the 10-year minus 2 year. I shared this before, right? So this is just a recap. Also, as long as the 10-year minus 3 months, the blue line starts to go below the 10-year minus 2 year, that's a tick, the start. Then when it starts to go above, like here, this whole period is like 19 months. When the 10-year minus 3 months go above the 10-year minus 2 year. So it somehow seems to coincide with remember the gray column, which is about 18 months. So this was 2007. So year 2000, it was about 8 months. This was in 1989 and 1990s. So can you see it's quite close, about 7. The difference about 7 months, the recession was about 8 months. So let's take a look. How long then will the recession probably going to be? Let's come back to here. And minus 3. So then we can add the 10-year minus 2 year, right? Come to here, you add lines. So we are here. So I think the 10-year minus 3 months undercut the 10-year minus 2 year probably around early this year, January. So right now the 10-year minus 3 months is still below the 10-year minus 2 year. Also based on this, if history were to repeat itself, probably at least we're going to have recession at least five months. And it has not even crossed above the 10-year minus 2 year. All right, so my take is we're going to have recession. Soft or hard, I don't know, but I know it's coming. unless something drastic happen. And based on the data, I think at least based on right now, this whole recession probably will last probably about 5 months. All right. So this is a thing about recession, and like what I say, to trigger this recession, one of the things it could be this U.S. commercial real estate crisis. So to know more, please go and read the public blog. I've written about this. All right, and it could be this that cause more so-called U.S. regional banks to collapse, then that may force Federal Reserve to cut interest rate. That's what I think. All right, which probably maybe second half of this year. My thing is recession probably is going to come second half of this year until second half of next year within this period. Also, this is what I can foresee is coming. All right. So that's for recession. Then let's come back to inflation. Oh, this is a PCE. Can you see 4.7? Or the highest it has gone back since 1980s. Can you see? And like what I mentioned, gold is a good indicator of inflation. This gold chart push forward about 20 months. Also, based on this, we probably can expect inflation. I don't think it's going to go up so soon. Probably it may rear its ugly head in the second half of this year. Later, I'll show you guys the Goldman Sachs commodity index is having a turning point. I think it's this month. That means the inflation issue may be coming back again. Please understand this. This inflation number that Federal Reserve is looking at, one of the very important component is actually wage, salary of the workers. It's not coming down. For that, it occupies about 50% of the makeup of the CPI. You think about it, you increase the salary of your employee because they complain inflation very high. You increase. Do you think it's easy after increase you cut it? Do you think it's easy? I think the employee not happy, he or she will quit already, right? Correct? So it's not likely the wage. It's easy to increase in salary. It's not easy to cut salary unless you say, oh, another COVID come. No choice. For the survival of company, we have to cut your salary. Very difficult, right? So that's why I say inflation is not going to go out so soon. All right. And to take note, the Federal Reserve next meeting, FOMC meeting, is going to be around middle of this month, 13, 14. Still have another 5 sessions to go. All right. The next one will be July, September, October, December. But the most immediate next one will be 13 to 14 this month. And based on the market sentiment, they say that probably Federal Reserve will pause the interest rate at 5 to 5.25. Probably July, you see the meeting date. They'll increase it to 5.25 to 5, then maintain, then start to cut rate probably in November and December. Right? To me, this is too optimistic. I don't think Federal Reserve will cut rate this year. My personal take is this. If you ask me, I still feel that Federal Reserve will increase interest rate probably towards the range between 5.5 and 6. Now it's 5.25. So I got a feeling probably we have 1 or 2 more to go. Why do I say that? Because let's come back to here. PCE. Let's take a look at PCE again now. Then we look at Fed fund rate. So ladies and gentlemen, so can you see the Fed fund rate is about the same level as the PCE? The Fed fund rate is the red color line. The PCE is actually the blue line. Can you see historically the red line, the fund rate is always above the PCE. So right now they are about the same level, no? So that's why unless PCE drop drastically, which I don't think so, that's why I think for me, the Federal Reserve probably will increase further interest rate further. What Powell do want to see is this, ladies and gentlemen, what happened during this period. Just to let you all know, the Fed chairman between 1970 and 1978 was actually this guy called Arthur Burn. Can you see? Because the inflation came down, he cut the interest rate too fast, too early, then inflation cut the blue line. Then he had to increase interest rate again. Then inflation came down, then he cut interest rate. Then inflation went back up, then he had to increase interest rate again. You see, until 1979, when Paul Volcker came in, this guy was Chapman. Or you see, yes, there's a reduced interest rate, but he go and increase it to almost 20%. No? It's so far above the PCE. Can you see? It was around 20%. The PCE was only about what? 7.5. But right now, we are like that. So unless you tell me PCE is going to drop drastically, which I don't think so, that's why I still feel that Federal Reserve probably will have to increase interest rate probably 1, 2, or 3 times more, and hike, maybe pause it. Then probably something trigger. You have a financial crisis, maybe from the US commercial real estate. Then it will then force Federal Reserve to cut rate. That's what I think. Also, if you ask me, I think this market anticipation of cutting interest rate was too optimistic already. For me, I still think that we are going towards 5.5 to 6. Or we need to overshoot the PCE or the CPI. All right, in order to curb inflation. Don't end up like 1970 and 1980. I showed you earlier, Arthur Burn, right? Inflation come down, he cut interest rate, then inflation go up again. Then he has to increase again. So this time around, I hope Powell has learned from his former chairman. I think he really should hike a bit higher to really make sure inflation is contained. If he cut it too early, he probably will end up like what Arthur Burn did. All right. Also, even let's say assuming even, because some people say, the May last hike already, no more hike. Some people say, but to me is, even though let's say May is the last hike, it doesn't mean Federal Reserve is going to cut rates soon, no. Because based on historical data, from the last hike to the first cut. First cut means pivot. The duration is about 8 months on average. So if let's calculate, assuming May was the last increase, 8 months later, when would that be? For Federal Reserve to first cut rate, assuming this time round the time frame in between the last hike and the first cut on average is about 6 months. So can someone calculate for me? Assuming May was the last hike. Can you key in the chat box? How long? When is it going to be? Assuming May is the last hike, 8 months later. January. That's why I say probably this year we probably won't see any interest rate cut. Don't bet on that really. I don't think that will happen. All right. And the market participant is simply too optimistic to see a cut in November and December. I think they are too optimistic already. All right. And don't be too happy when Federal Reserve cut rate, like what I shared before. The blue line is a Wilshire 5000. The black line is the Federal Reserve fund rate. So can you see whenever Federal Reserve fund rate cut the fund rate now, can you see first it paused, then cut. Then can you see there's always recession. This Wilshire 5000, there was a bear market. You see, this was what? Pause, cut rate, bear market, recession. 1970s also. You see? Then maybe some people will say, very no. You see here, cut rate. Stock market still go up. Federal Reserve hot. Stock market still go up. So we are here right now. So what make you think that this time around it will not be this or this? I think a very important factor is I place this chart overlaid against the PCE. Ladies and gentlemen, can you see this period? This was very high inflation. It starts to turn down. That's why over here, even though Federal Reserve, the inflation rate has started to turn down already. That's why Paul Volcker, he start to cut interest rate, then he increase it, then he cut interest rate again. But the PC has already come down already. So over here, the PC was at low level. Can you see? But can you see we are here right now? We are at high inflation rate. Also to me is don't be too happy when Federal Reserve cut rate, which I think probably is going to happen next year. This is most likely what's going to happen. After they cut, will they cut to zero? I don't think this time around they'll cut to zero. Because like what I always share, probably for the next 30, 40 years, we will be seeing higher and higher interest rate. Inflation will stay high. That's why interest rate will not go back to so low, like especially the last 10 years. That's why I say, going forward, people probably will not need to take a lot of risk, like invest in stock. Like right now, for example, in Singapore, our Singapore Treasury bill is about 3.85%. Risk-free and guaranteed by government, 3.85. Why still need to go into stock market to risk our money? Because buy stock may lose money, right? Also, what I'm trying to say is don't be too happy when Federal Reserve cut rate, or probably next year. or that is when, for me, I will enter my third tranche. Remember my old SPP, I already entered my first tranche. I'm waiting to enter my second tranche. My third tranche will actually be probably next year after Federal Reserve start to cut interest rate. Can you see I have a game plan? I'm sharing you guys my game plan. I'm executing my game plan. Are you all doing the same thing? I hope you all are. Is the stock market is it going to break new high this year? I don't think so. In fact, I feel that it's a bit overstretched already. That's why this SPP was designed for a 2-year period. For us to take our time slowly to accumulate good REITs, good blue chip at a reasonable low risk based on our RI. All right? Can? Okay, so now I want to go into individual asset classes. Since we have been talking about interest rate, I want to talk about bond first. Also, this is the, are you looking at the cycle chart of the US 10-year Treasury?
Yes, Derek.
Yes, this is a projection from June until end of this year. I do see a turning point probably towards end of this month. This is US 10-year Treasury price, not yield, price. Remember, yield and price go different opposite direction, right? Price go up, the yield come down. Yield go up, the price come down. This is price. Also, the turning point probably end of this month. Right? So what does it mean? So this is a cycle chart that I crunch. I just want to say this. Don't look at the magnitude of the cycle chart. Look at the turning point. First thing. Second thing, it doesn't mean straight away around turning point we straight away go and buy or sell. Our trading or investing decision does not depend on the turning point. Our trading or investing decision is based on technical analysis, break support or break resistance, or based on technical analysis, or based on fundamental analysis, intrinsic value, whatever, all these things. It doesn't depend on turning point. I want to say this to emphasize again. All right. So when I see a turning point, probably towards end of this month, this give me a clue. Probably, I think, remember, Federal Reserve is going to have a meeting here, 13, 14. Market says they're probably going to pause the interest rate increase. Based on this, I have a feeling this is how I interpret the cycle chart. Let's look at probably the ETF, IEF, which represent the 7 to 10 year Treasury. This is price already. This is not yield. This is price. So can you see this IEF recently? Yes, it has a bounce. I mean, it came down. The price came down. That means the US, the yield go up, right? For example, the 10-year Treasury yield. Yeah. You see, recently has gone up. The US 10-year Treasury yield has gone up. That's why the price has been coming down. Because of what? Because of the debt ceiling. Then it bounced off this 200-day moving average. Then last Friday, you see, it's a black candle, long candle. Based on the cycle chart projection, I have a feeling this IEF or the US 10-year Treasury, the price may continue to drop probably until this support here. Or even go lower. Or at least you'll come back to a 200-day, retest this low, or even go lower. Based on this, I have a feeling that Federal Reserve may increase interest rate this month. Actually, some of the Federal Reserve officials already start to come up to talk things already, and they are hawkish. Because stock market has been going up. Actually, next week is a good, because the FOMC meeting is 13-14 So 1 week prior 13-14, all the Federal Reserve officials, they cannot say anything to influence the market, to say what they feel about interest rate. So actually next week is the last week. So the next week, whole week, let's see what the Federal Reserve officials they say. If they continue to be hawkish, so I think there may be a chance for Federal Reserve to increase interest rate another 25 basis points. At least that's what I see the cycle chart is projecting. All right, so I have a feeling the US 10-year Treasury yield probably will go higher. I mean, over around here. If it goes higher, it also means that Federal Reserve probably will continue to hike rate. Will it go beyond this 4.10, 4.25, sorry, I don't know. But remember earlier last time I talked about the 2-year Treasury, right? It's a leading indicator for the Fed fund rate, right? Remember? Yeah. Even the 2-year is also turning up instead of turning down. The 2-year Treasury, since it's turning up, is also showing that Federal Reserve probably is not done with the hike in the interest rate. Okay, so if you ask me, I don't think the interest rate hike is over. They may pause this month, then next month they increase again. I don't know. But if you ask me, the terminal rate, I don't think it's here yet. And don't talk about cut rate. That's what I feel. But based on the cycle chart, it seems that Federal Reserve may have a chance to increase interest rate maybe this month. All right. Let's talk about stock market. This is our RI, 38.13. This is the third month is below the 40% mark, which is the blue line. If y'all can recall, during the May, the follow-up session, I mentioned, right? When I place our RI against the Wilshire 5000, whenever our RI go below 40, it's a good time to do accumulation. You see? Over here, do accumulation. Can you see? Now it's below 40. Now is a good time to do accumulation of what? Like what I share of REITs. That's why for my first tranche of money for REITs are almost in already. All those blue chip dividend stock haven't, but risk, especially last week, all in already for me. Also, as long as our RI is below 40, I think it's a good period to accumulate. I hope going forward it can go even lower to 30 and below. That means a green zone. That means we are even having a even lower risk. It go to green zone, that means it's like 208 over again in terms of risk level. That's what I hope of. But ladies and gentlemen, can you see the risk level has reduced significantly already compared to here? Can you see? All right, so, and for those who don't want to, like for me, because I've been doing it for the last 24 years, for those probably you're working, no time, all these things, probably you can do DCA or dollar cost averaging. Until when? Until probably when our RI go above the blue line, the 40% level. When? I don't know. Also, that's why every month when I update the RI, I will announce in the Telegram group or announce in the Facebook group. Then you're logged into the private blog to go and see, okay, where our RI is. But for May is 38.13, 3-month reading. That means if you do DCA, probably you can do 2 to 3 month reading. All right. I really hope the next trigger point for the downside in the stock market will come. Hopefully, it will be the US commercial real estate. When will it be? Then probably this is what I want to show you. This is the latest dynamic cycle chart of Dow Jones. The next turning point, probably middle of this month. That's what I say. Probably Federal Reserve may increase interest rate. And the next major turning point is Q3, around mid-September. I want to say again, don't look at the magnitude. It doesn't mean the Dow Jones will crash. Don't look at the magnitude of the cycle chart. Look at the turning point, the timing. So the next turning point probably is around middle of September. That is probably where I'm going to execute my second tranche. Because my first tranche almost in area. That's why I conducted the class in May. I conducted the follow-up class in May, right? So my next time to pull my second tranche probably will be in maybe August, September. Okay, all right. The debt ceiling was lifted. That's why Janet Yellen was so happy, right? Finally, can go and borrow more money already by the US government. All right. But I just want to show you all something. This is S&P 500. Yes, Friday we have a very long candle. Then a lot of people start to say, oh, the bull market is back. In fact, a lot of people are asking me, so is the bull market back? I wish I can say yes. But in my heart, I know the interest rate has not been reduced yet. Because when Federal Reserve cut interest rate or pivot, based in historical data, that is probably will see more downside in the stock market. So I also wish the bear market is over. The bull market is back, I hope. But Federal Reserve has not even cut interest rate. So let's take a 2-year view of S&P 500. This is when the bear market started. S&P is here right now. Probably will go a bit higher to 4,003. There's a chance. But I think this is going to be a very strong resistance. S&P closed at 4282 last Friday. I think around 4,003 will be a very strong resistance. All right. Then let's talk about Nasdaq. Nasdaq was even stronger because all the AI stock or the big tech stock like Apple, Microsoft, all heading higher, right? But can you see? Nasdaq probably is going to see this resistance. This to me is quite strong for index, ladies and gentlemen. This is not even an individual stock, it's an index. And let's look at Apple. Frankly, for me, I did not participate in what Apple, Microsoft. My focus was in REITs. All right, but so that's why I say during this stagflation period, it's actually a good period for traders. If you have been riding a trend on Apple, I think you have been making good money. But Apple, can you see? Let me show you. Apple is hitting a resistance soon already. Also, probably it's going to form a double bottom. Let's go at 10 years. You see, double bottom. Will it break out? Probably. But to me, it's probably you have some correction first. When? Based on the cycle chart, probably when? When cycle chart. We are seeing a turning point probably middle of this month. Probably because of the FOMC meeting. But the next major one probably will be around September period. What's going to happen here? I don't know. But something very interesting. Later I'll show you guys the cycle chart of the commodities. Most of them show turning point around August. So around August, September, I don't know what's going to happen. Something probably is going to trigger something, I don't know. US commercial real estate, regional banking crisis, war, I don't know, let's wait and see. All right. The thing I just want to say is this: Nasdaq 100 is the 100 largest company in Nasdaq. These are the 6 companies. You see, it accounts for more than 100% of Nasdaq 100's gain this year. No, the Nasdaq 100 is up more than 20% in the first 100 days of this year. Historically, it has only happened 4 times in the last 50 years: 1975, 1982, 1986, 1991. And 3 out of the 4 instances, the Nasdaq 100 has finished the year lower than it was on the 100 day, on the day 100 of those rallies. I'm not saying this is definitely going to happen, but the thing is, if history were to happen, and based on the cycle chart, I think this rally is a bit overstretched. I mean, the US stock market is a bit overstretched. All right. We should be expecting a pullback soon. And I'm looking at the next major turning point probably in September. That's why for stocks, for my SPP, my game plan is this. My first tranche already in. My second tranche, I'm probably looking at August, September. My third tranche will probably be next year when Federal Reserve cut interest rate. Then we have another weakness in the stock market again. Can you see? I have a game plan. This is what I intend to do. And I've been executing it until right now. That's why February I did the SPP classes to get y'all prepared. Then May I did the follow-up, give your signal already to make use of the correction because of debt ceiling. Now debt ceiling over already. Hopefully we'll have a weakness because of whatever reason. Why I think Q3 probably is going to be weak, because Q3 starting in July, you have the starting of the announcement of the Q2 results. I don't think it'll be good. And if Federal Reserve still increase interest rate, which I think we can have a few next week when we listen to more Federal Reserve officials make statement. If they continue to be hawkish, then probably 14, they're going to announce another rate hike. Also, if there's another rate hike, if poor Q3 rating or maybe whatever crisis, it may trigger another drop. Anyway, the US stock market is the rally is a bit stretched. I do expect a correction to come in. Crash, like what I mentioned earlier this year. Last year, if you ask me, last year probably the market had dropped 2/3. We probably have 1/3 to go. If you look through historically, we don't really have 2 consecutive years of consecutive drop in the US stock market. Even have, no, there is, but not always. You understand what I'm saying? Also, that's why I say second year, which is this year, will not be as bad as last year. I hope this time around, the next turning point drop a bit more, then maybe next year, when Federal Reserve start to cut interest rate, we can even see a bigger drop. That's why the SPP is designed for 2 years. Can you see that? Not only for this year, it's for next year as well. That's the philosophy or the thinking that I put behind the design of the SPP. All right. Also, this stock market. So if you miss the debt ceiling, the correction, or to accumulate some good stocks, probably At least for this year, the major turning point probably will be around September. All right, let's clear this year first. Next year, then say next year will be Federal Reserve cut interest rate. All right, which I think will cause even more weakness in the US stock market. So if you ask me, I do not think the bear market is over because the Federal Reserve has not even cut interest rate. Frankly, ask yourself, ladies and gentlemen, I'm showing you all the chart of S&P. Are you looking at the chart S&P?
Yes, direct.
You think this year S&P is going to go higher and break this 4,818 high and go even higher? I still maintain my view. This high will not be broken this year. Same thing for Nasdaq. Nasdaq has quite a big drop. It's back to its August high. So do you think that Nasdaq is going to go higher, then break this high and go higher? I don't think so. Even Microsoft, which is one of the 6 companies I showed you all just now, right? You see? I show you 5 year. It's probably form a cup. I think it's going to keep the resistance. Probably coming down to form a handle maybe, or even a double bottom. I don't think it's going to break, continue to break higher. Or it has a strong rally already. All right, so if this few big stock or is going to have a correction soon, do you think Nasdaq or Nasdaq 100 is going to continue to rally? I don't think so. All right, so do take note of this dynamic cycle chart of Dow Jones. Wait, currency. This is a dynamic cycle chart of US dollar. The next turning point probably will be in November. I read a lot of people ask me about de-dollarization. All right, my take is it will happen, but it's going to be a long process. All right, and please don't think that renminbi is going to topple US dollar, because before renminbi, there's still euro, there's still yen. If any currency want to topple US dollar, you understand what I'm trying to say? Because renminbi is still not as widely circulated. It's not liquid. It's not so widely used. And euro was born in 1999. How many years already? 24 years already. Until now, still cannot overtake US. You think China renminbi can do so? I don't think so. All right, so with this turning point probably around November, what is it telling me about US dollar? I'm showing you all the US dollar index. You see US dollar index has a good rally. So my take is, I think US dollar or probably is going to go higher to challenge the 200-day moving average. This red line is a 200-day moving average. That means US dollar probably is going to strengthen until so once it can clear the 200-day moving average, probably it will go higher towards 50%. This is a Fibonacci. Once it can clear 200-day and clear this, probably can you see this may be, it may be in a process of forming a double bottom. So once it clear, it may go higher to 50 to 61. But frankly, I don't think US dollar can clear this high. I don't think so. It went up. It went up so much, especially last year. It's because of the interest rate hike. One thing I want to say, we are definitely at the later part of the rate hike cycle already. That's why I say maybe another 1, 2 more, that's it. But doesn't mean Federal Reserve will cut. Also, if Federal Reserve is not going to be so aggressive like last year, I don't see any reason why US dollar will go to this high and break this and go even higher. So even though we see a turning point probably in November, or my interpretation is probably US dollar will go higher, find reason at 200-day. That's also where the 38.2% reason, Fibonacci reason is. If they can clear this, maybe 50 or 61. I seriously don't think it can come to here and take out this. I don't think so. I don't think so. All right. Anna. So this is the cycle chart of US dollar, right? Turning point around probably later part of November. And interestingly, ladies and gentlemen, US dollar has a fixed 3-year cycle. Whatever I show you all is a dynamic cycle. It also has a 3-year cycle. Can you see? 3-year, 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 3-year. Also for this year, so the next turning point, can you see, probably is around middle of 20, this 24, this 25, 23. So every 3 years, there's a turning point. So probably around middle of next year. Also, that's why, based on all this, even though, yes, US dollar may rally, but I don't think you will take out the high like what I show you, right? Or probably you'll rally a bit, then I think you'll start to turn down again until probably 2024, middle of 2024. Then probably because maybe the start of war, maybe China will do something to Taiwan, or NATO will do something to Russia. Also, US dollar is a currency that's quite interesting. When there's a crisis, it will do well. When the US economy is doing well, US dollar will do well as well. Also, but probably around 2024, based on this US dollar fixed 3-year cycle, probably we'll see US dollar strengthen again. Probably starting mid 2024. because of war, maybe. All right. So this is something for us to take note. But for the rest of this year, I do think that US dollar probably is going to strengthen until maybe November before it weaken into maybe middle of next year. All right. And because of this, very interestingly, yen has a fixed 8-year cycle. Down here is 2023, 25, 27, 29, 31. Also, I say US dollar probably will strengthen, right? That's why yen recently has weakened. Can you see? Yen, it has weakened. So if US dollar, let's look at USD yen. You see USD yen has been going up because USD has strengthened, yen has depreciated. You see that? So now is actually a good time to go and visit where? Japan. I have a friend, whole family now visiting Japan. Good, yen is weakening. I'm not surprised if USD yen continue much higher as yen weaken. Even the yen 8-year fixed cycle is saying that probably we still have a big weakness to go before it start to bounce up, probably maybe next year. What I'm trying to say is we probably will have more weakness in yen. Do take note, Japan has a new what do you call that? Governor of the so-called something like the monetary authority of Japan. All right, so can't remember his name. They just changed a new person, I think, this few months. Also, I'm not surprised because just to let you all know, in case you don't know, Japan inflation is at 4.1%. It's the highest for the last 40 years. This new governor, I don't think he can suppress the yield curve for too long. All right, he has been. I mean, Japan has been keeping interest rate low for a long time. That's why there's a lot of this carry trade, right? Actually, do you all know Warren Buffett, very clever. I mean, recently he visited Japan. I mean, a few years ago, he invested in 5 Japanese trading firms, right? Then recently he double up. At the same time, he's issuing bond in yen, because the interest rate is so low. So he pay people a little bit of interest. Then he go and buy this, let's say this 5 big trading house that has good dividend yield. And think about it, if you are the CEO or the boss of this 5 trading house, Warren Buffett can't tell you, I'm going to buy into a company. Do you know what will happen to your stock price? Every company will want Warren Buffett to be an investor in this company, right? You go and look at what happened to the prices of all these 5 stocks. This Japanese stock has been rallying very strongly, and they give good dividend. So think about it, Warren Buffett is. You think he is only a value investor? I don't think so. I think he's very good in economic, in currency, and he has a lot of cash coming because he owns insurance company. He borrowed money at very low interest rate in Japan because he issue bond in yen ma. Then he go and buy this all these 5 companies. He make money. At least from the dividend also can cover the, he take the dividend can cover the yield, the interest of the bond that he issued. Can you see that? Some more he still can enjoy the capital appreciation in the 5 Japanese companies. All right, so even though it's 92, I think he's good. But I just want to say this, with the inflation rate at 40-year high, 4.1%, I think this new governor may not have a lot of time. He may have to start to increase interest rate already. He still can tahan for a while. That's why probably yen is probably has some room to drop, like what is happening right now. Yen drop go. A lot of people visiting Japan, they will spend all this because of weakness in yen. It's a good thing for Japan. But because of this inflation, ultimately, I think Japan, BOJ will have to increase interest rate like what the rest of the world is doing. And because of that, yen will start to turn up, like what is showing here. Probably end of this year, as US dollar weaken, probably we'll start to see the strengthening of yen. So moral of story, probably it's a good time to visit Japan, like what my friend is doing. All right. Okay, I've covered commodities and currency, so I'm not cover commodities. This is the cycle chart of the Goldman Sachs Commodity Index. Turning point probably around July. That's why I say the inflation issue is not going to go off so soon. Probably is going to come back and haunt Powell some more. That's why whoever expect Federal Reserve to pivot or cut rates so soon, or even this year, probably he or she is far too optimistic. All right. So this gold, based on the latest cycle chart of gold, the next turning point is probably around August. Then we'll see a directional change. You see August is here. This gold, silver, probably a bit. Gold is probably early August. Silver is probably later part of August. Let's look at gold. So whoever attended the SVB class in February, you took action. You bought gold. Probably you have enjoyed this run up. So now it has pulled back. And you go 2 year. 2 year. This is a gold chart. Also, I have a feeling probably gold may not have too much of a downside to go. It's probably going to hover around here. Or then you'll make a big move like what the cycle chart probably in August. All right, so for those who miss this, after attending the course, you still daydreaming. All right. Now probably you have a second chance. I don't think gold is going to drop a lot from here. It's probably going to hover around this level before it goes higher. One thing I want to share is this actually one of the factors that play a part in the gold price is actually the US 10-year Treasury. As we all know, gold doesn't give dividend. It's just based on capital appreciation. So when the yield go up, for example, the US 10-year Treasury yield has been going up, right? Right. So relatively compared to US 10-year Treasury, so when the yield go up, that means the price come down. Actually, gold will not do well. That means gold price will follow the US 10-year Treasury yield price, US 10-year Treasury price, note price. Because if US 10-year Treasury note price go down, the yield go up, gold price frankly will not do well. But we all know that probably we are near to the rate hike already. I mean the end of the rate hike. So the resistance to the gold price probably will not be too much already. And when Federal Reserve start to cut rate, maybe next year, when the price start to turn down, the yield start to turn up, that's when gold price will go even higher. Okay, don't worry, I'll talk more about this during our next follow-up session. All right, we have a follow-up session in July. Why? May we have a follow-up session. Also, remember I talked about risk, I talked about all this, how to choose a good REIT, all this thing, so that we can make use of the correction in the debt ceiling to go and accumulate some good REITs, right? I'm going to do another session in July. If you, after attend that one, you still don't want to do anything, then I cannot help you. Why July? Because we need to prepare for this. Okay, so whenever I conduct any follow-up session, what webinar update, whatever, come and attend. Don't go and listen. If can, come and attend. Don't go and arrange something or say, oh, I look at the record session, can already. Yeah, 1 month later, for example, May you never attend or you never view the record session, then probably you miss a chance to buy some of the good REITs because their prices have came down because of the debt ceiling. So I want to say again, the next session is when 7th of August. This is the second follow-up session, 7th of August. Make your time to attend this. Later I'll share you guys what I will share during this follow-up session, okay? So, it will be, so go.
Derek, should be 8th of July.
Yeah, they're 8th of July, not 7th August.
August.
Oh, sorry. I say 7th August.
Yeah.
It's 8th of July. Very good. I see who got listened. So very obvious, Victoria and Candice got listened. Very good. Also, it's 8th of July. Okay, so I just mentioned gold. So then silver is also around August period. So this is a gold chart. So like what I say, probably gold and silver probably is not going to make a major move anytime soon based on cycle chart. Probably is going to hover here. As maybe Federal Reserve increase 1 or 2 rate more, maybe in June or July, then probably you'll start to make a big move probably in August. Okay. Then oil. All right. For oil, the next major turning point will probably around August. Very interestingly, do you realize gold, silver, all around August? Is something going to happen in August? I don't know. Very interesting. So, ladies and gentlemen, cycle chart give us projection of like when the timing, something is going to happen. What is going to happen? Don't know. That will based on fundamental reading. US commercial real estate crisis or breakout of war or what, I don't know. But let's observe what's going to happen in August. Also for oil, remember during the follow-up session in May, I mentioned about the 50% rule. I say any things that's tangible. Tangible, that means will not go to zero. Like what? Like oil, like gold, like property. Will not go to zero. We can apply this 50% rule. Do you remember? This does not apply to stock because stock can go to zero. Okay? But this apply to things that's tangible. 50% rule says from the high, drop 50%. 50%. There will be a reasonable support level. That's why from 130, it dropped half 50%. Is it around 65? Can you see it ting tong around 65? And going forward, I think it's going to break this. I think it's going to challenge this 200-day moving average. And over this weekend, I think OPEC Plus is discussing whether to cut production or not. I think today, this weekend. So I don't know, have they done any announcement already? Yeah. You see? This CNB. No, not CNB. CNBC. OPEC meet to debate production cuts new cut. This probably will cause oil to go higher to challenge this 200-day moving average. So this 65 is going to be a very strong support. Okay. So this is a 50% rule. The thing is, based on this tangible asset, if drop 50%, it can drop another 25%. That means from a high drop to 75%. That means, assuming here is $100, drop 50%, is it $50? Then if you can drop another 25% more from this high, that means altogether 75%, That means drop to $25. I think it's a steal. That means can buy, sell house, sell dog, sell wife, sell husband, go and buy. But if you ask me, I think 65 is going to be a very strong support. Or most likely oil price is going to, if OPEC Plus is going to cut production again, probably oil price is going to go higher, test this 200-day. Or even this high here. Is probably going to range for the rest of this year. But 65 is going to be a very strong support. Very interesting, right? Well, this is what I learned from a very experienced trader. I want to emphasize again, this 50% rule only applicable to tangible asset like commodities. If Rolex really can drop 50%, 100,000 drop to 50,000, or even drop 75%, drop to 25,000, I'm sure buy. Rolex, you think will drop to zero? I don't think so. So this 50% rule apply to anything that will not drop to zero. That's why it does not apply to individual stocks. Okay, I make this very clear here. Also, this is where I think oil price will go. All right, so it probably will go higher, but around August, a turning point, or probably it will turn back lower towards 65. That's why we probably will be within this range, 65 and maybe around 80, 85, this range for the rest of the year. And very interestingly, oil price has a fixed 11-year cycle. Also, I zoom in. Can you see? This is 2021, 23, 25, 27, 29. If you all can recall, I mentioned war cycle seems to be peaking around 2025 to 2027. Also, I think oil price probably will go higher. Not this year, probably next year, 25, 26, 27 go higher because of war. All right. And I think for this year probably will be hovering within this range. This range here. Based on the cycle chart, or probably next year, 25, 26, 27. As war break out, we should see oil price go higher. I think it will challenge this 130 high or even higher. All right. Okay. So I've covered this. Finally, blockchain. All right. This is the latest cycle chart for Bitcoin. Interestingly, you also have a turning point probably around late July, early August, like the commodities. Interesting, right? I wonder what's going to happen in August. All right, so the turning point for Bitcoin probably end July, early August. So let's go to the Bitcoin chart. I do see a correction coming. Bitcoin probably will come down to challenge this support here. It's here right now. Probably you'll come down to challenge this support. Or even this support. Around here. All right. Ladies and gentlemen, this is the price chart of Bitcoin. Actually, Bitcoin was born in 2009. And it rally historical high was announced almost 70,000. Bitcoin has enjoyed days of the QE and low interest rate. Until last year, then it experienced the aggressive increase in interest rate. Actually, Bitcoin has not really gone through a recession yet. Because during this period, there was no recession. Don't talk about 2020 COVID-19. That to me is a man-made one to me. That's why I call it a pandemic. So Bitcoin has not been tested through a recession yet. So I will be interested to see when recession really comes, how Bitcoin will react. All right. I'm not surprised when recession comes, when people go risk off. Bitcoin probably will go lower. I'm not surprised. But one thing you need to take note is Bitcoin has a halving process. The next halving process is going to be April next year. All right. So I want to emphasize this again. We can treat Bitcoin, Ethereum, crypto like Toto. Or don't put little money, can. Don't go and put a lot of money inside. To put a lot of money inside, probably you want to look for REITs or good blue chip stock or even gold, but not in crypto. Right? Can. I think I still got a lot of things to cover. Sure. So I cover Bitcoin. So now very quickly I'm going to cover SPP. I think last class a recap. I think based on data's REITs and gold price will do well during periods of speculation, right? Also, for me, if you all can recall, my first tranche of REITs investment already in. That's why I try to prepare you guys by conducting the May class. So I just show you all the latest cycle chart of down zone, right? The next turning point probably September, right? That's why we'll be doing the next follow-up class in July. Probably August, September. Probably I'll enter my second tranche, then my final tranche will be next year when Federal Reserve cut interest rate. Do you want to know what REITs I enter? Yes or no? If yes, can you key in the check box? If no, then let's skip this. I see a lot of no, then better to see. Okay, I like healthcare. Healthcare REITs, there's only two to choose. First REIT I have Parkway. I choose Parkway. For me, I only want to choose those REITs with strong sponsor. Like Parkway REITs is a strong sponsor in IHH. IHH, go Google for it. For industrial, I bought into Ascendas, and because Ascendas, the sponsor is actually CapitaLand. I bought into Mapletree Logistics because the sponsor is Mapletree. And I'm very happy. Finally, I have a chance to buy into retail is Fraser Centrepoint. Okay. So these are the few REITs that entered. Let me show your Parkway. Can you all see this the chart of the Parkway Life REITs? Are you all looking at it?
Yes,
Yes.
Derek.
So this is the monthly chart. So I managed to got it, I think, last week. I think around 360 around here. Ladies and gentlemen, the high was 522. Also, whoever bought here, after that they see Parkway came down. I think I entered around 360, around there. So 522. Okay, how many percent discount I have? I calculate 360. Wow, I enjoy a 31% discount. You all like to go, when you go shopping, you like to go when there's a sale, right? Yeah, there's a sale now. That's my first tranche in. So my game plan is this. My first tranche, no, I already have a amount allocated for my SPP. Then for my SPP, certain amount is for REITs. So I 3 tranche for REITs. My first tranche is in 20%. Then second tranche, probably August, September, 40%. Next year, Federal Reserve cut interest rate, my remaining 40% in. Then 100% of my PP allocated for REITs, I'll be in already. So can you see? I'm not. I hope Parkway REITs can drop even lower. But now, at least technically, it's at a good support. You see? I think I got around 360 around there. Can you see this? Around last year, October, he has a bounce. Then it came down. Then it went up. Then it came down again. Then it broke this support. You see? And go even lower, fine. Then bounce off this 360 support, which is what I draw here. So my first tranche for my Parkway, I'm already in. So hopefully August, September, can you see this is a very, actually Parkway REIT is a very good REIT. Can you see the price has been going up? Along the way, no chance to buy, no. Now got a 31% discount. At the peak, based on the TTM, trailing 12-month distribution. At the peak, whoever buy here, the yield is not even 3%. Now, at least my dividend, my distribution yield got around 4%, at least. Why I dare to go and buy? Why? Because of this. Our RRI is already below 40. I know we are already at the low risk. That's why I say below 40, you can start to accumulate. I hope something bad happen in August, September next year when Federal Reserve cut rate even more, the stock market drop even more, I can buy more of Parkway, even lower price. Fraser. I got Fraser also, Centrepoint. So now, last week, I managed to get it last week also. Fraser probably didn't drop as much, but from a high of around 288 around here before the COVID-19, can you see? It was 280. I entered around here, I think 213. I entered around here. You should know. So next time I go next, I go Causeway Point. I actually own part of, I'm a part owner of Causeway Point or Next or Punggol Water Point. This is how I view. And when I buy into REITs, I'm not going to sell so soon because I can collect dividend and I've entered at a much lower price. I hope by August, probably you can come to here, the October low. Maybe next year, Federal Reserve cut rate, hopefully it can come to here. Ladies and gentlemen, I just want to say this. REITs is both a bond, it's a hybrid between bond and stock. REITs price has been coming down. A lot of people say, yeah, because of interest rate increase. Probably, but I want to show you all something. Federal Reserve I'm showing you all the Fed fund rate. Federal Reserve increased interest rate from end of 2015, you see, until end of 2018. Around here. Then they halt. Then actually they start to cut interest rate, then COVID-19, then they cut until 0. So between you can see 2016 and 2018, they increase interest rate, can you see? And they increase interest rate also. So let's see, let's go back to 1 year. So yes, Federal Reserve cut interest rate since March last year, right? Yes, the risk price has come down. But let's go to the last time they increased interest rate. It was between 2016 and 18, right? Can you see 2016 and 18? You all see below 2016 and 18. Did rate price drop a lot? No, it seems to be hovering, right? All right, so what I want to say is this: rate increase interest rate, yes, will impact REITs. But another factor that will impact REIT is because it also acts like a stock. That's why can you see? That's why during the global financial crisis, it dropped almost 180, dropped to 40 cents. Then can you see between 2016 and 2018, ding dong, ding dong, ding dong, ding dong, ding dong. So this time now, yes, REITs also suffer because of rate increase, but also because we are in a bull market, we are in a bear market. You understand what I'm trying to say? So actually, REITs is a hybrid between bond and stock. So the recent, last whole year increase of interest rate has made REIT price weaken, right? Wait till maybe next year Federal Reserve cut rate. Hopefully, we will see another drop in the stock market. We probably will be able to buy REITs at a much lower price. Okay, then so don't worry, I'll cover more during our July class. You all don't want to come, no, it's okay. Or you want to watch record session, watch, it's okay. Then you probably miss the timing, it's all right. Okay, and not only miss timing, after you attend already, go and do something. Well, I don't know whether you all attend this or attend all this, then you all go and take any action. Did you all? No, I just want to check. Did you all take any action? Can you all just key in the chat box? Let me take a look. Did you all take any action? I don't know whether you all take or not, but at least I know Victoria did. No, she's a Malaysian, no. She buys Singapore REITs, so I don't know buy already. So, but at least she go and open up a CIMB. Is it CIMB? Vic?
Yes,
I trade.
Yeah.
You know? And Vic, you already know what's REITs to buy, right?
Yeah. Yes.
You buy already.
Yeah.
Buy
Friday.
already.
Yeah.
Wow.
Buy already.
See, he's a typical person. I know because I spend time with her to go through. At least now she know what she's going to buy. And Vic, tell them what else you're going to buy apart from REITs.
I bought Parkway.
No, apart from REITs, what you're going to buy?
Parkway, risk, and the gold. But it's just like another one is a bank that you mentioned.
Which bank?
DBS.
You know? So at least she knows she has a target already. So you all have your target already now, and she took action already. She's a Malaysian. Don't tell me you're Malaysian, wow, very far away, cannot trade Singapore stock, all this. Well, big deal already. I know because I have a session with her. Don't expect me to have this kind of session with every one of you guys. I don't have the time. If you want to know more, you can go and ask Vic. Another reason why, especially Malaysian or even Indonesian, go and look at Singapore REITs is because, especially Malaysian, this Sing dollar against ringgit. You just leave your bank, your ringgit inside your bank, you know the answer. But when Vic put her money into Parkway REITs, she's actually hedging her ringgit against using Sing dollar, no? Because she buy into Parkway REITs, which is priced in Sing dollar. Right? So she will receive her dividend in Sing dollar. Is it? Is it like that, Vic? Or in
Yes.
ringgit?
Yes.
Sing dollar.
Ringgit
Yeah, lor.
against, yeah.
No, you receive your dividend in ringgit or Sing dollar.
Sing.
Oh, yeah. Lor. So you see, so she is someone who listen, take action. I don't know about you guys. So I hope this, for example, can motivate you all go and take action. And she knows she want to buy DBS. So she now start to accumulate money. DBS not so soon. That's why come for the July class. Why I want to buy into the 3 banks in Singapore? Because they give good dividend. And do you know, in case you all don't know, Singaporean can verify. All our 3 banks, they are committed to pay out 50% of their earning out as dividend. 50%. And the dividend yield is DBS 6.5%, including a special dividend 4.8 and 5.5. It's as good as REITs, no? But wait, I tell Vic to wait. I'm telling you all to wait now. Why? DBS. This is a money chart of DBS. Why I say wait? Because DBS, because interest rate haven't cut yet. You understand? Net interest margin, and I mean NIM. The black line is DBS. Red or orange line is OCBC. Blue line is UOB. Can you see there are NIM, especially UOB, starting to turn down already. This is how one of the way how the 3 Singapore banks make money. That's why if you look at the chart of the 3 banks, UOB is underperforming OCBC and DBS right now. Why I say DBS wait? I tell Victoria to wait because DBS is anyone can tell me this is a monthly chart of DBS. Do you all see a chart pattern over here? Those who attend DD7, you should know. Can you tell me what chart pattern is this? Then you key into the chat box. This. Federal Reserve haven't cut rate now. Wait till it cut rate. I think this double top probably is going to be completed and DBS will come even lower. I'm waiting. My first tranche haven't included DBS yet because haven't cut rate. Maybe you can draw trend lines, huh? We'll have cheaper price for DBS and OCBC and UOB. Why do I choose these three banks? I mean, I share some of the reason here. The PR ratio is 50%. The dividend yield is so really as good as the so-called REITs. And especially Malaysian, when you buy these three banks, your ringgit will be converted to Sing dollar. So it's a good hedge against the weakness in your ringgit or even rupiah. All right. Well, there are of course, other criteria that I choose all these blue chips. Like maybe another one I'm looking at is actually Singapore Tech. Singapore, it was a name. I forgot it. May class ST Engineering is a good dividend stock. Now, every year is paying 16 cents of dividend. You all can go Google. 16 cents. Very interesting, right? Can you see ST Engineering? It has gone through the global financial crisis 2008. So can you see wherever it touches this blue support line, it will bounce off. So I'm waiting for it to come down. But it's a fundamentally good stock. It has a very good ROE, return on equity, all these things. So during the February class, I share you guys, or even May class, I share you guys how to look for good REITs, right? The 7 criteria, right? So during the July class, I'll share you guys how I choose all the blue chip like banks, like ST Engineering. Also remember to come on the 8th of July, okay? And so whatever I shared about all these REITs, all these things is part of our DD7 passive income investing. That's why we want to collect dividend for passive income. Last time what you all attended DD7 is active income trading. But what I share with you guys for these REITs, all this blue chip is for passive income investing, right? So that's what I've done for my risk portion. My blue chip haven't really touched yet. Gold, I'm almost in already. But my money allocated for my SPP allocated for gold is, I think, almost in already. All right, so, but for those who are not in, the turning point probably is around August, right? So probably you can consider take some action. All right, so I think with that, I've almost talked for what? How long? Now 10 something. Also, I finished my portion, so probably I'll pass the time back to Candice for
Hi, thank you, Derek.
maybe Q&A. Yeah.
Okay, just give me a minute. Allow me to share screen. Can I check? Are you all seeing my presenter view or the main slide?
Main slide.
Okay. All right. So thank you, Derek, for all the good tips. So appreciate for the long awaiting sharing by you. So amazing insights here for every one of us. So before we move to the Q&A sessions, ladies and gentlemen, I have an update for all of you, which I believe Derek has actually brought it up earlier. So we have a post SPP course follow-up session 2 on 8th of July. All right, which is from 10 a.m. to 12 p.m. Singapore time. So Derek will share the SPP strategy on blue chip stocks. So kindly lock it in your calendar and not miss the upcoming session. All right. So please take note, 8th of July, 10 a.m. to 12 p.m. So now let's move to the Q&A. Derek, there are some Q&As coming in. Let me get the questions, yeah?
Yeah.
Okay, pardon my voice because still recovering from a sore throat.
It's okay.
Allow me to repeat if you can't understand my question clearly. Okay, Derek, we have a question by CMS. Hi, Derek. Have you personally exited the inverse ETF trades that you entered late last year or early this year?
Have I what? Hesited?
The inverse ETF trades that you entered late last year or early this year?
I still have some. Because I'm expecting remember the turning point, remember the down zone? The next turning point is in middle of this month, and the next turning point is in August. So I still have some left. If there's opportunity, I'll add more. If I do see that things are getting more messy. All right.
Thank you, Derek. I have got another question by Alex. Hi, Derek. Previously, Martin Armstrong said there could be a slingshot upwards of the stock market. Are there still possibilities of it happening?
Maybe you should go and ask Martin Armstrong. I did not say that, so I cannot answer for him.
Okay, sure.
No,
I'll
it's
go.
just like you buy KFC or then the KFC got problem, then you walk into the McDonald's shop. You ask, hey, why the KFC got problem? You should go KFC restaurant and ask KFC, right? So maybe is you should go and ask Martin Armstrong, all right?
Okay, so another question is by Lenny. Hi, Derek. I see that you removed your infamous gold and silver Facebook profile background pic. Now a bad picture. Do you sell your gold?
Do y'all? Yeah, can let me share.
Yeah, I'll stop the share
Okay.
screen.
I have a Facebook page, right? Do you all know that I have a Facebook page? I have a Facebook page, page, not Facebook account. This is a page. Page. So what do y'all see? Can you tell me what do you see? The background?
Gold and silver bars.
No? Still there? Oh?
Just follow the page.
So this is a page. This is my personal account. Down here, I'll talk more That's a fun thing, jokes or whatever, all these things. But if you want about investment, about finance, all this, go to my page. My page is still gold and silver. Okay. And
All right, got it, Derek.
Yeah.
There's a question by MC. To invest in gold, other than buying into gold, is buying into gold miner stocks a good option too?
please take note, if you buy into gold mining stock, the performance of the gold mining stock, it doesn't depend only on the gold price. It also depends on how the management manage the gold mining company. So if the gold mining stock have a lousy management, it doesn't mean the gold mining stock price will go up just because the gold price will go up. So if you purely want to ride on the strength in the gold price, probably you should look at ETF like GLD or inverse, example, leverage ETF of gold. But if you buy into all these gold mining companies, you have to do more work. You have to go and find out whether it has a good management company. It has a good management team. But one thing is good is if a person buy into a good gold mining stock, if the gold price go up, the gold mining stock prices will go up in terms of percentage more than the price of gold. If it has a good management team which manage the company well. So if a person want to ride on the gold price by buying the gold mining stock, he or she will do more homework to go and understand the company more and tell more about the management team. Just like Warren Buffett, we all know he buy into OXY and Chevron. They are oil companies. Well, he didn't go and bet on oil price itself. Instead, he go and buy on all these oil companies because he know the management team. He know, at least based on what he say OXY has a good management team, and he increased his stake in actually OXY, in Chevron. Also, that's what I can share about gold mining shares. All right.
All right, thank you, Derek. I have got last two questions here. One question is by Isaac. Hi, Derek. In the past US presidential election, you did show some data on market leading up to US presidential election. What about the presidential election for 2024? Will the previous trends stay the same?
No, not every election will have the same trend. Like what I say, next year is a US presidential election year, but next year probably is also the year the Federal Reserve start to cut interest rate if no crisis happen this year. So based on historical data, if Federal Reserve cut interest rate, stock market probably will not do well. Because historically, because there's this thing called the 4-year presidential cycle. Normally, third and fourth year, probably the stock market, US stock market will tend to do well than the first 2 years. For example, this is a third year, right? That's why Biden will make sure the debt ceiling is being lifted. But with the recession, don't know when it comes, and when it comes, Federal Reserve have to cut rate. That will further probably cause weakness in the stock market. So I think a very important thing is to take note of what Federal Reserve is going to do. If they're going to cut rate next year, I think the stock market probably will not do well. That's why I say the SVB is designed in such a way that it's for 2 years, this year and next year. Because I see the market is going to be like this. Yes, the US stock market S&P Nasdaq has gone up. I think it's probably, at least based on cycle chart, we're going to have a turning point probably middle of this month, right? Until the next turning point, August. That's why my plan is, my first tranche is in because of the debt ceiling. Then second tranche is probably August, September. Third tranche is probably next year when the Federal Reserve cut interest rate. That's what I feel about stock market now. But the thing is, I just want to say, is the election year a good year for stock market? You look at 2008. You all remember when did Obama become the US 44th president? Anyone? When did Obama become the 44th US president? Anyone? Can you key in the chat box? Go Google. Which year? Right? You all remember what happened in 2008 global financial crisis, right? So it's not 100% the fourth year of the presidential cycle will be good for the stock market, not necessarily. And I am not too optimistic for next year, which happened to be an election year. All right. Okay.
All right, Derek, we take the last question by
Yeah.
CS. Can you please elaborate more on the logic behind entering more when interest rate cuts? Why is the logic?
Okay.
Can you please elaborate on the logic behind entering more when interest rate cuts? Why do you buy? Is it CS could be referring to why do you enter more into the market when there's an interest rate cut?
I explain already because when there's an interest rate cut, the stock market has a big drop. Can you see that? Unless history does not repeat itself. But at least based on year 2000, 2008, when there's an interest rate cut, this Wilshire 5000, can you see it dropped further? Here also, when there's an interest rate cut, the Wilshire 5000 drop even more. Just now I mentioned 2 cases not happening. That means the stock market didn't drop when it cut interest rate, right? I will explain because the interest rate, the inflation rate was low in the 2 instances. But right now, the interest rate is not interest rate, the inflation rate is so high. So a lot of people thought cutting of interest rate is a good thing for stock market. Actually, it's not true. There's a lot of myth out there. All these are data. Data cannot lie. You see for yourself, unless history doesn't repeat itself. You know? All right.
Okay, thank you, Derek. So, ladies and Derek, I will share screen.
Yeah.
Okay. Thank you, everyone. So, ladies and gentlemen, thank you for joining us tonight for the market update. We have come to the end of today's session. So please log in your calendar on the 8th of July, 2023, Saturday, 10 a.m. to 12 p.m. Singapore time for the post-SPP course. All right, this is the follow-up session 2. So thank you, Derek. Thank you, everyone, for tonight. So good night, everybody. Have a good time. We'll see you in November for the next update. See you. Bye-bye.
July.
No, on next market update. Next market
Oh,
update.
okay.
Yeah.
Thank you.
All right.
care.
See you.
Bye-bye.
Bye-bye.